Welcome to this edition of Searching for Mana FinTech. In today's episode, I'm joined by Pratima Arora, Chief Product Officer at Chainalysis. Before we dive in, we want to express our gratitude to our sponsor for this particular episode, Freemarket. Freemarket is a leading platform for corporate currency exchange and cross-border payments. They empower businesses with seamless international money transfers and competitive exchange rates. With tailored solutions, market access, and expertise in technology and banking infrastructure, Freemarket simplifies the complexities of international payments. If you're a scaling business, this platform is designed for you. Check out their link in the description and enjoy the episode. Pratima, welcome onto the Searching for Mana FinTech show.
Thank you for having me. I'm very excited to be here.
Likewise. Just for a really brief intro, and then I'll hand over to you, Pratima, because you'll do more justice. Excited to have our second guest from Chainalysis onto the Searching for Mana show. The focus for this show will be, much about the function that you're working within, which is, leading product with Chainalysis and all of the things that come with that. But also we'll go a little bit into your background because you've got a real rock and roll CV in the tech world. So keen to cover some of that and obviously get to know all about your Mana. But it's also nice to come back to another person at Chainalysis. We had Michael on, the founder, last time, and so anybody who's listened would understand what an amazing opportunity is, and you guys have had such successful traction. But a year has passed or so, and a lot has happened in that year. So really going to be interesting to understand what progress has been made, what challenges there are, and what you guys are looking at moving forward. So if you could be so kind, Pratima, to for anyone in the audience who doesn't know, explain just a little about Chainalysis, but also what your role within it is, please.
No, absolutely. It has been a roller coaster, right, in the last 1 year, right, to say the least, Lloyd. So much has changed, and I think, but we'll touch on it throughout the podcast. Let me tell you a little bit about Chainalysis and then my journey and my role here. So Chainalysis, we call ourselves as a blockchain data platform company, right? We want to provide data and insights for multiple purposes. And the company started with forensic tooling for helping law enforcement and private sector customers with helping out with, investigating and catching. And we've been part of a lot of really good cases that has been solved using our technology and tools. But Chainalysis as a data platform doesn't stop there. We help a lot of crypto and TradFi and financial institutions, whoever are dealing with blockchain in any shape or format, to prevent risk, like help them with their risk mitigations, risk and compliance. And I'm personally very excited because we've taken that platform more recently into newer use cases. And actually one of our products been generally available today, as we're speaking around, called Playbook, which actually helps you see what is other user behavior on blockchain, right? Because when I look at Chainalysis, the cool thing is, when internet came out, and I think Michael talks about this too, it was like information sharing becomes decentralized. And as blockchain comes out and value of transfer becomes decentralized, you need like a map to know what's going on this new world. And we've just mapped that world, right? So we map real world entities on blockchain, and then we can show you so many cool things, from transfer of funds to behaviors of users, and that can be used for building trust, which has been our mission as a core mission of building trust in blockchain, to also now providing other insights that are possible because we have that data platform.
The way that I'm trying to look at the opportunity is, and I'll name a couple so it's not specific to one, Bloomberg, Thomson Reuters, these type of financial market data organizations which would be how traders would navigate that landscape previously. And I can't help but always thinking of Chainalysis as having that type of future. However, if we look today, and by the way, you're about to probably massively correct me, then a large user case, as you say, has been, on the government side, the trust that people needed about the origin of sources and all these type of things, which makes a load of sense. But is the roadmap what I'm thinking the opportunity could be as well?
It's a very interesting. We see ourselves less as Bloomberg, but more of Google and Google Analytics in a lot of ways. But actually, let's start with the journey. I think you touched on a very interesting point, Lloyd. Like we provide data software research to government agencies, exchanges, financial institutions, insurance, cybersecurity company over 70 countries, right? Like that's what our business is today. And we provide them with investigations, compliance, risk management tools, right? Like that's like the core of the business. And the mission, which attracted me and a lot of people, and I think founders, is to build trust, right, and promote financial freedom. And I think what people don't realize is how transparent and incredibly powerful blockchain is as an immutable open ledger, right? Like, so it's just like, it's the entire history of transactions is available in the public block explorer, right? Like anybody can go look at it. So the premise the company started was like, why is it used for illicit activity? It's like the worst platform to use for illicit activity if you think about it. And that's just so powerful because we help you translate the numbers and those, for some people it's random numbers, but they're not random numbers, but those numbers and letters into what is meaningful to people, right? So I think if you think about how do we build meaning on what's happening in blockchain, starting with helping people with investigations, prevention, which is risk and compliance in my mind, and then using those same data sets to actually help you understand, like if I was a Web3 company, I want to understand what my users are doing on blockchain. I know what they are doing on my platform. Like if I was an exchange, I know what my users are doing, but I want to know they're acting on blockchain, right? Which is, so I can also give them a little map on what's happening on user behaviors on the chain, which is pretty interesting.
Yeah, and I think that really, risk and compliance starts to get in our worlds more and more sexy. It's like when I started to see, like data scientists 15 years ago, that become the rock and roll stars. And hasn't that got to a point now where almost everybody understands that based on the culmination of OpenAI and the wonders, if you think they are wonders, that can go toward. And we'll talk about technology and artificial intelligence later, but I just want to stay on that point because I think it's remiss of me to not push you on a few of these type of things.
Sure.
So
yeah.
let's use my sister Georgina as a segment of the population. She's in her mid-30s. She absolutely understands, broadly speaking, what blockchain and crypto is. Maybe some of her friends have done well with it, maybe some of her friends have not, but she's not a particular avid user of it. Now, her expectation of how you could trust it would have been completely kiboshed with what's happened last year in the markets. And the example probably of prominence there being FTX that she would even know about. And I know this because, I host this podcast and I've been told several times, she's like, go and do an expose on Sam Bankman. And I'm like, Regina, that's not what I want to do with this platform. But also, trust me, there's no way that I could actually do that right now. And there's people like Michael Lewis who are bringing books out on him. I'm at the back of the queue on that one. But that's what interests her. And so I think where Chainalysis and other good actors have a huge mission on their hands here is how could you make Georgina trust that this would be somewhere that she would come to in the future because it's all well and good saying the ledger's open. This would be the worst place for bad behavior to happen. But it has. And I think that's because it is open, but criminals or bad actors tend to work with a short-term mentality. And the ledger is an ocean of so many different data points that it takes a Chainalysis or some of the others to come and bring that together, make search quicker. That's a big challenge. So I can see that that's useful if you can have the search tools brought to you, and you're an agency. But for the consumer, where's the reassurance there?
Yeah, such a good question there, right? And Lloyd, when this happened, trust me, I had this was every dinner conversation for us with any friend I met, right? To the point, it's a funny story I'll tell you. I have we go to ski up in Tahoe. I live in the West Coast, and I was on a lift with my daughter's classmate's mom, and she's like, "You work in this industry? What's happening with FTX?" And I'm like, "Oh my goodness!" On December 24th, on a ski lift, that's the conversation we're gonna have. So it was just so hilarious. So I think it has hit the general market, right? Where that awareness is there, and people. What hurts and what's the sad part about what happened with SBF and FTX and 3AC is it's so opposite to the premise of blockchain, right? Like the people who came into blockchain are the people who was all about financial freedom. It's all about transparency. It's all about trust. And it's all about not having these things happen, right? So when something like FTX happens, you almost want to be like, whoa, like this is anti or it's opposite to the promise of blockchain, right? So if you just think about that, and then you look at it and say, why did that happen? And then you start asking the question, how can it be avoided? And then how do you build trust back, not only for the institutions, but for the public and consumer safety around it? And there is by no means are we done, or I think we're scratching the surface on risk and compliance and managing consumer safety. The good thing that has come out of this is that there's been so many conversations happening about what do we do as an industry to avoid or mitigate these risks from being happening, which I think just by awareness, the first step of mitigation is awareness. And I think that has been such a positive step. And I think our industry will come much stronger out of all these incidents that are happening in terms of building those safety measures, which were ignored, to be built from ground up and day one, and also rethinking where we were, that we had created those choke points as central authorities, which were against, in some ways, against the premise of blockchain, right? The whole idea was decentralization.
And
there's
Pratima,
so much.
I think that's what will, typically happen for people who understand the cycles within technology, that these get, used by good and bad actors, and then over time, hopefully it's beneficial. So, it's unquestionable that we've been in that cycle and there's still a way to go. So one side of it is, more and more of the private market incentive system building up where it protects itself, which I believe will happen. The other side, of course, is regulators and policy. And I'd love you to talk too. And I know some recent thoughts have come out from your colleague, head of policy. But, from your perspective, and also if you want to include any of those determinations, what would you call policymakers and regulators to be doing more of right now?
Such a good question. And it's almost a turmoil, at least in the United States, in some of these things, as you've seen last week happen with all the SEC and Binance and Kraken and Coinbase things that happen. I feel like there is, and I think some countries are doing much better on this, by the way. So MiCA, I think, is actually a great example of something really happening positively on the European market. But let's come back to MiCA in a second. Let me tell you, like at a framework level, how we think about reducing risk in digital asset sectors? I think first of all, there has to be there has been going after crypto, even like for banks to be able to support crypto businesses, this has been a curtail, like, right? So rather than trying to curtail bank exposures to digital assets, I think regulators can work constructively to reduce that contagion risk. And I think that in two ways, right? The first is working with financial institutions to establish clear practices and guidelines for managing these risks to serve the digital asset sector. And if you follow the Basel Committee of Banking Supervision, has taken a step in that regard through standards of capital treatment of bank exposures to digital assets, right? Like first you need to bank those crypto, like it's been such a thing, like, hey, this has been like the debanking effect, which is kind of worrisome. And secondly, and more importantly, for the longevity of this, is to establish a regulatory framework for digital assets. And this is what we published in the blog recently about having 3 pillars to that digital asset regulations. Number one is just the prudential requirements, right? And prudential requirements have been part of the financial system for a while, but targeted requirements around risk-based capital, liquidity leverage, large exposures that help ensure that you continue to meet those obligations under stress scenarios. And I think just making sure that we are testing those stress scenarios and thinking about those stress scenarios that happened in some cases last year. That's first, like prudential. Number two would be market conduct requirements, right? And in 2022, we saw the importance of standards around corporate governance, market integrity in the digital asset sector. For instance, trading platforms undertaking, related functions such as custody and proprietary trading be required to implement governance frameworks and controls to mitigate conflict of interest and contagion risk, right? Like these kind of things have been available in other parts of the financial sector, but never made it into. But if you think about it logically, they make total sense. Like this is just how do you prevent? And last but not the least is going back to your cousin or sister, is about consumer protection requirements, right? Like actually building consumer protection requirements as you build this industry. So digital, and as digital asset adoption continues to increase, and we hope it does because it's the right thing for financial equality across the globe, and particularly in retail sector, consumers' safeguards will become even more vital. And this has to be done through, customers' assets should be appropriately segregated and have, subject to they say resilient custody arrangements. And I think the most important part of this is consumers should have information on material features and risks that they're signing up for, and consumer education and suitability or due diligence, such as consumer knowledge assessments, potential levels to ensure retail investors and the nature of the investor in this space. Like I personally feel that there's so much information, but it's not consumer ready for people to even able to digest it and make better decisions. So there's a huge amount of work that needs to be done around consumer safety, information, and understandability of some of those. So I think those were the 3 things. So prudential requirements, market conduct requirements, and consumer protection requirements is how we think about sustainable digital asset regulation should think about.
Thank you. If I think about what you've just said, and then think about the obvious opportunity to bring artificial intelligence into, let's just use the last pillar that you discussed. One, suspects that chatbots are certainly going to be very good as of yesterday, and could bring that type of consumer awareness for Georgina, my sister, that has been lacking. So that's going to get implemented. But on the contrary to that, it also perpetuates potentially misinformation. And so, having talked to a lot of individuals who are in the compliance and risk game within Web3, you start having this just magnitude of orders larger competition between good and bad actors where you're using artificial intelligence. So, certainly I'm a tech optimist. I think overall it would be good to be introducing artificial intelligence, but you can just also imagine that it's also going to bring a load of bad effects as well. Now, as the individual who's leading product for Chainalysis, and Chainalysis really leading this initiative in my career, I would love you to riff on this and specifically talk around how you are, and this is going to be broken out into probably a couple of parts, but how are you almost thinking of defending what's going to come into the space with artificial intelligent efforts? But then also, how are you looking to, already implement and build product with the use of artificial intelligence? I suspect they go together.
They do. We were on, I brought my leaders together for an offsite and we were scenario playing, and this is totally out there. And we were joking about what will happen when the bots are just talking to bots and one is trying to scam somebody and the other is trying to defend it. It's going to be a world that we might live in at one point. And so we just went further out and how things can play out. But, there's a lot of, I'm a technologist. Actually, I didn't introduce myself. So I run the product engineering research. I'm responsible for the R&D organization, so responsible for building products at Chainalysis. And as a technologist, I started coding when I was in 6th grade. So then I see new technologies like LLM and AI and come through, and then you start thinking about that intersection with blockchain and crypto, and you're like, your mind blows, right? Like, oh, cool. How can we actually leverage this? No doubt there's going to be risk on both sides as these kind of technologies get used for good reasons and bad reasons, right? But let's focus on the good reasons. Let's think about how can we actually use this technology to help the industry be more successful. And some of the things that, what LLMs does is natural language processing in a scalable, more intelligent way. So I think education and helping people understandability of what's happening on blockchain is so critical. And it can really bring that understandability level by a step function change higher. So there's a prototype that we've been working on is, what if we could just use an interface like ChatGPT to do an entire investigation, right? You can just ask a bunch of questions and it starts building you. And you can come to a point where you actually solve a case just by having a few conversations and to end with it. And it's very powerful, right? We're just experimenting with things like that. Makes the life of law enforcement or compliance and risk officers really easy, where they don't have to today go through a high learning curve of, okay, how does blockchain work? What is transfer of funds? What does this smart contract do? And what's happening in the world, right? So I think there is this huge uplift of understandability and learning, and I would almost say automation. And I think that's where you end up with automation of these things, and that automation can lead to a lot of prevention, right? So if you have human intervention, you can see if this is a scam or a fraud, just because it can actually give you an early indication of, and we can do that, right? Today, there are a lot of fraud companies who are doing it, but they're based on more heuristic-based approaches, and we do that. But I'm almost thinking that, hey, you can apply more behavioral patterns to these kind of things and surface a lot of these early patterns earlier to consumers. So I almost feel like it benefits all the way for investigators, compliance people, and consumers for each and everything that they work on.
I always find these things useful to try and visualize a specific case study that then we could understand how this was working or is working. And then with what you've just discussed, how that would work, which I think we can probably on this show mostly all relate with running a search where you're, prompt engineering, you're starting broad and then you're going specific. And, now without much technical expertise, one might be able to quite quickly get to the crux of a case. So I think understand how that's amazing if it's leveraging into the data and the
Yeah.
insights that you've got. But how was that working? Why wasn't that able to happen without the level of ChatGPT AI?
I think some of that already happens, right? So I think being able to say what we do is like we have a cluster, which we call an entity, has millions and millions of addresses. And through heuristics and basic ML, we've already said all these, and we had over tens of millions of addresses for Coinbase, for example, right? So we can actually say all this belongs to this same entity. And we do that already. We've been doing it for years, right? So that is already, we have over 500 algorithms that run in our systems that help you bring that kind of intelligence. So you can actually say, search for Garantex, for example, and we'll tell you thousands of addresses related to it, and you can see your exposure, bad and good to it. I think what LLM tells you is actually doing that not through search, but through a conversational. So I actually can say, hey, what does what are other things like Garantex happening, and show me other risks of patterns that you're seeing that have similar behaviors. And I think some of it, again, I think was possible, just required more systems and more algorithms being written. I think what LLMs have technically done it for us has given us a much faster, easier way to implement these things. And the natural language processing piece, I think, is the killer in it. I think just being able to have that at a conversational level and also have recommendation and of similar behaviors is what is very exciting. I think the behavioral patterns piece is the most interesting to me.
So the moat then, as we see business models become more or less valuable in this world, is the proprietary data that one is sat on, surely. Because if I try and find out or uncover financial information through ChatGPT at the moment, then, on certain things I'll get stopped, and in certain things it doesn't have it necessarily. Yeah. So what one has that is the most valuable thing is that data, because now the natural language programming system can quite easily do what the other side of the potential business model was, which took a professional who might understand how to code around and present and visualize that data. So is that correct? And if so, specifically, how does that affect Chainalysis? Do you feel you're in a stronger or less strong situation now?
Data is the king, right? And I think a lot of people have been saying that the more and the better data you have, the better you would get at it. I personally think you have a huge advantage if you have better data and better identified data in our case. So hence, I think that's why it was such a delightful moment when we started taking some of these OpenAI and LLM algorithms and running them through our systems to see the kind of insights we were finding. It's just gives us the bigger advantage because we have a data set that is actually indexed and also mapped in a way that also has a lot of identifications built, right? So it doesn't tell you this address is doing this with another address. It tells you this entity is doing this with another entity, right? Or this behavior is happening against these kind of things. So I think we definitely have a much bigger advantage because we sit on a data set that has a lot of this already indexed in a way which is very useful.
Pratima, just before we move on to the function and future projections, if we start with your background, then I always find really fun to understand origin first. So like really where you'd like to start with the origin story so we can get some type of idea about your background, please.
Totally. I am a nerd, self-proclaimed nerd, if that tells you anything. I actually grew up in India, started coding in 6th grade, and traded my computer to buy a computer for my AC so I could have one or the other in the scorching heat of New Delhi. But I think it served me well. I started my career as an engineer, and I've gone into building products. And so, and manage the R&D organization here at Chainalysis. So that includes engineering, product, and other things. Before Chainalysis, I've been in SaaS, right? So if you look at my background in CV, you'll see I was at Salesforce when they were in their really growth stages of software. Atlassian, I ended up managing the business line for Confluence along with managing the product, and Chainalysis because there's three words that describe me, and one of them is a learner. And I thought I just was so fascinated by this technology of blockchain and the mission of Chainalysis of building trust in it, that I thought was like the perfect intersection for me to join the company. So that's a little bit about myself.
Thank you. And if you gave us a view of what a week looks like in your function and the way that you're balancing, obviously, a large function, a large bunch of responsibility, but remaining obviously, focused at the same time. So how do you spread that week out, and what are the different things that you're working through?
Obviously, as any leader will know, in an operational role, a good chunk, I would say 50% of your time, 50-60% of your time goes in just the operational rigor, right? The scale, managing the team, making sure we're executing on what we said we're going to do, and things actually get shipped with high quality and high customer value out the door. That's goes without saying, but a lot of operational rigor. We've grown last year tremendously. We doubled the team, making sure we are working efficiently, and we have the accountability on delivering, but not only on the outputs, but measuring the outcomes of it, like actually providing customer value and so I think there's a large chunk that goes into that part of my week. And then the rest of it.
On that chunk then,
yeah.
There's so many different styles. Is there a particular style you have or a particular toolkit that you would talk to the audience about?
Yeah, actually, I think there is, I believe in two things. One is autonomy and accountability. So I always tell my team that there's a coin in this. I will give you 2 A's on each side. I'm giving you full autonomy to be doing things, but I want accountability on the other side, right? And so I'm actually a big believer on teams that are autonomous, that can run fast with lowest amount of dependency around organizations, because speed is our only differentiator, right? As much as we can say data is and data platform is, that's a moat. An ongoing differentiator for any company to be successful in the long run is speed, right? Can we at speed continue to collect data? Can we at speed continue to scale? Can we at speed continue to deliver customer value? So there is a high amount of autonomy. My teams are very autonomous, but I want in return accountability. And there are a few principles that I use that I actually wrote down when I first joined the company. And one of them is outcomes over outputs. Like, outputs are great, but they're not measurable, and sometimes they don't know what they lead us to, right? So how do we actually build an outcome-driven organization who's actually saying, okay, this is the goal that we're going to achieve, put a time frame, a month, a quarter, a half a year, it depends on and then you have full autonomy on how to get there, right? Because that means you might have decided this was one way, but that didn't work out. So an outcome-driven is also hypothesis-driven, if you've heard that term in building products. And so I'm a big believer on a hypothesis-driven thing. Okay, I said I'll do this because I assume this will happen. If it didn't happen, let's course correct or change. But the outcome hasn't changed because we all decided that was the right outcome to achieve. In some cases, outcome changes as well. But does that kind of give you a sneak preview into how we function? But we also have other principles like highly aligned, loosely coupled, like if you've heard that, right? Like strongly aligned, loosely coupled kind of a function is how we operate.
Yeah, I love it. I think a lot of it comes back to making sure that who's coming into that culture is aligned and correct for it.
Yeah.
And then, as you say, if you're hiring the right type of people who like that type of environment, then I love those type of principles. And if you can get that environment right, which I think tends to require it being an absolute rocket ship to attract that type of talent and then retain that type of talent, then it's a wonderful way to work. But it's quite challenging to get an environment where, particularly if you're distributed, you really do let the rope out on accountability. So there's a lot of OKRs that tech companies are using, that type of model, and there's good and bad around it. But yeah, that definitely answers that question. And I know there's an awful lot more. That would be a whole separate show, which we should do at some point. On the other side then, so that's operational and management. On the other 50% of the time across the week, if you could talk to that, please.
Yeah, no, definitely. And just to wrap up your comment on that, we do use OKRs and we do bring people together just because we need that high alignment, and you can't let a function go on without having that continuous checkups. And I can actually on that show tell you exactly like what points do we even have things on. Like we have a thing called alignment reviews, which we do weekly, and it's I think one of our successes and how it works. And but different show. We'll come back to it. Next 40-50% is actually more strategic thinking, right? Like going across. It's sometimes like spending time with customers, spending time with new technologies, having the space and the brain power to even think outside your daily things, right? And I think making that like focus time is very critical for me to be able to do that. So I think I would bucket customer interactions, future technologies, trends in the market, those kind of things. What's happening with like the regulatory market and what we can do to help that, to accelerate that, not only from policy making, but from products and services, right? We were just literally having a conversation about, okay, MiCA comes into effect. This is their requirements. How do we provide, what data sets can we provide to really automate that process? Like literally going into that. We've been working with regulators to say, okay, how do you supervise? What can we give you, to help you actually monitor this in an efficient way? We have an opportunity to do this technically forward way. So not, and we have this data. So I think spending time on newer use cases, newer products, newer segments, within the realm of what we do and what we have. So that's fun. We just wrapped up our hackathon last month, and there's so much exciting stuff that came into that we're actually planning for the second half. So cool, fun stuff. I think fun is both sides, but more long-term, medium to long-term thinking.
It's so important, isn't it? When you've got a number of people, and like you say, you have to spend a whole load of time on making sure that there's creativity, productivity, engagement, and all of these things that are aligned. You could get overwhelmed with that. But if you do that, when you're in a business that has to be running at pace, then you're not planning for next month, next year, next 2 years. Jeff Bezos famously says, he's not celebrating today for the quarter announcement. He's kind of thanking himself 3 years ago. The work was done then, and obviously they're on such a scale. Yeah. But certainly in your world that is the case. You're working on today, and you're working on a month, and you're working on a year's time. That's for sure. And if you don't step outside of that weekly operating, and your team as well in certain strategic roles, then you'll hit a brick wall in 6 months' time. So I have that type of situation with a lot of our clients in my organization as well. And so there's certain toolkits that I'll do to make sure that I protect that type of side of the strategy, where you really need to get away from any short-term pressures to be able to work on it. And it's very basic things, I'll go on long walks to have those things, or I'll go speak to certain mentors who aren't interested in the operating side. They want to talk about strategy, and then it will absorb my mind over to that side. Any things that you're practically, we've both got young families as well. There's so much going on. How are you through your week on the personal side, making sure that you have that balance and productivity? What's working for you?
I definitely have. There's one good thing working for me. Our company is based in New York headquarters, and I'm in West Coast, so I generally wrap up my meetings by 3:00, and which is great because that actually end of the day recap. I always have an hour to do that. I'm a big meditator. I have meditated since, I was in high school.
Amazing.
And so I have a joke, and my husband jokes with me. If I don't meditate for 2 days, he's like, and he can actually see a personality difference in me. And he's like, when did you last meditate? I'm like, I get the point. I get the point. But actually on a day-to-day, weekly basis, just making sure that you have the time blocked for these kind of thinking. When I travel, I use a lot of my flying time because I don't have meetings. That's my cheating. To actually really do some deep thinking, because there's nobody sitting next to me who knows me, is going to trouble me, or I can't. And also is very important, right? I don't know if you use this framework, but I have used this framework, and I keep reminding our team on is having the discipline of investing 60-30-10. And when I say 60-30-10 is we say 60% of our time and effort is going to be invested on things that are going to generate revenue this year. And I'm very diligent about actually doing those checks often and saying, hey, is my investment, and 30% is that's going to give us revenue in like 6 to 18 months, right? So, and then the 10% is lots of seeds I'm going to plant, and some of them are going to come up and some of them are going to fail, and that's okay, but that's going to move on to the next 30% and then to the 60%, right? So it's like I'm a gardener too, so it's like my planting strategy, right? So I'm going to plant a bunch of seeds in that 10%, but I'm going to keep 10% of my land dedicated to that. I'm not giving that land away, and I'm going to keep the 30% to the next stage, and then that it hits my core products stage. And somebody was challenging me yesterday. I'm like, oh, are you sure we're actually over investing in 10%? And I literally quickly did a math of people. I'm like, I'm ballpark in the right directions.
I love that.
But I think doing that with the time as well.
Yes, yeah. I haven't heard that specific ratio, but I love it. That's really cool. That makes so much sense. Well, I'm really looking forward to the Mana round, which we'll get onto now. So to start with, if you could have the front cover of a publication that was very dear to you, and you can let us know what it might be, Financial Times, Economist, whatever it might be, what message would you put on the front cover?
I have so many. I think my favorite would be blockchain turns out to be the safest way of transferring value across boundaries. Or blockchain turns out to be the safest way of financial or value transfer, like something around. And we see all the bad actors move back to other fiat ways of doing it. And it is not too far, because I think the power of blockchain is equality. And I think the worry of blockchain is safety. And once you put safety, I think this should literally help us with the financial equality that we all dream of this technology can give us.
What keeps you up at night?
I sleep very well. But I think what keeps me up at night is bad, not bad. I would say, what's a more positive way to say this? It's like regulations or coming in that like literally kill the innovation, right? Like some sort of a handcuff that actually prevents this industry from actually getting its true potential. That would worry me.
Pratima,
And
do you think that given we're in June 2023, if anybody's listening to this in the future, that right now America might be quite close to that situation?
Yeah, that's the reason it worries me at this point. Maybe it's timely. Maybe it will change. I hope it changes in next few months, if not. But America is in a very,
how does that leave you and the office and the individuals in that office or the community, but mainly you, thinking about where you're based for your career in this space?
Chainalysis is a very global company. A lot of the customers we serve are international, and we do see our international business continue to grow. Those don't, I think we are an enabler of helping people manage the risk, right? So I think the way we think about it is if the industry doesn't grow, it impacts us from that perspective for sure. But it also, the reason it worries me is like, how can we help how can we help provide data that would make people more comfortable with actually only less percent, like we put out a crime report, less than 1% of activity in blockchain is illicit, less than 1%. I think people don't realize that, and everything gets painted in the wrong ways. I think for the company, I think we'll continue to do business. International is going to become a bigger segment for us, and it is growing. For me personally, I think it's like, I think the sad part would be to see the innovation go out of this country, right? Like the Web3 innovation just go out. It's like it's more sad than anything else. In the 5-year horizon, to be honest, Lloyd, I think it will turn out fine. I think that's kind of my horizon. I think 5 years will turn out fine. I think the next 1 to 3 years are going to be interesting.
Well, I think, just looking at generally venture capital space, looking at Asian markets, Middle Eastern investment, European markets and American markets, I'm asking myself this question the whole time as well, because there's so much written on the pros and the cons of all the different territories, and there's massive macro political things at play at the moment. But you just hope and suspect that suddenly what's been so unbelievably fantastic that comes out of America's melting pot of talent, quite frankly, isn't going to change. But right now, there is a bunch of stuff that's desperately trying hard to do that. But I think you're probably right, that over 5 years it's completely fine. So in which case, what we could put onto the front cover as a message is that there's less than 1% of illicit activity on the blockchain. Which I do think would shock Georgina, my sister, or quite frankly me. What I'm going to imagine if we said that is there would be skepticism around it. What type of data have you got to back that up?
Oh, so much data, right? So what we do is we look at trends. So we not only we map real world entities to blockchain, and then we can actually look at good and bad entities. So we can look at things that are, good things, and then we can look at things that are darknet markets, scams, frauds, sanctioned, you can tax, like all that ransomware. And I'm happy to send us that data or bring that chart up, and actually shows And actually, you know, of course, the value of illicit activity on blockchain is increasing, but as a percentage, it was about 20 billion. It's not a small number. Let's be very careful. But as a percentage of total activity on blockchain, it's still very small, right?
So that's the percentage of the
total activity on blockchain.
Well, yeah, I want to just get a distinction here, and it's hard because we can't use the word fiat or dollar, or because there's so many different currencies. Let's just say, I don't know what the way to say it is, whether it's token or currency, but the real value, be it seen as dollar, fiat, currency, whatever it is, the monetary value is 1%. It's not the amount of transactions 1%, but from that 1%, the quantum's quite high.
I don't know the number of the amount of transactions. I don't think that's that high either, but but it's the value of, but it's you know, it's increasing. I'm not saying it's not increasing. It actually was like a 4 billion a few years ago. It's about 20 billion, but the industry have grown in the last 3 years faster and much faster than that. And we also monitor different segments, right? So you can see actually ransomware took a dip, and we see how hacks took a increase. And sanctions and hacks were the two winners, is the wrong word, but the most increased bad activity that happened last year, for example, whereas we saw a decline in terrorist financing and ransomware. And some of it is because of these tools are so much better, right? Some of it is because we know Chainalysis helped us get some. But there were a lot of things that got sanctioned last year in Russia and North Korea. So we can actually map activities going to them even after they were sanctioned. And we saw, and you can see that there was an increase in that. But overall, it still has been like in single-digit percentage of things that, from what we can map, right? Like, of course, from what we are aware of, and what our data shows us. Right?
Well, yeah, that's fascinating. Well, that's very encouraging. Do you have a particular, and I mean, we've heard of one of them that's very important, but do you have a particular ritual that you like to talk to the audience about, you know, that you lean on and that's really powerful for you?
Meditation is my big power in a lot of ways, because it was a practice my mom did, and she still does. And I started in high school which was a very odd year to start, because high school kids are all over. But I think that helped me just ground me, and it's something I'm trying to teach to my kids and the younger ones, right? So I use like apps and tools, and
so how do you, you know, so we could visualize it. What are you doing? Is this something that you've got a relatively go-to time to do it? How long are you doing it for? Is there any, do you use any of the applications, or?
I actually don't use applications personally for my own meditation. I have my kids use meditation apps, like a sleep meditation. Sometimes if somebody can't go to bed, and we've used sleep meditation a lot at our household with Headspace as an app. And their kids' sleep meditation, if you haven't tried them, it's actually pretty cool. They have a kid version of sleep meditation too, with Elmo in there and trucks, and it's pretty awesome. My husband cannot meditate; he's tried everything, but my meditation is more focusing on breathing and on your inner self. Like you actually breathe through your gut, and then you come back up. And I generally do it in the evenings, because I've tried to do it in the morning, but my mind is running. So evenings are a great time for me to. So my routine after I finish work is workout, shower, meditate. And that's how I like to end my day. It just gives me the right space too. And maybe that's why I sleep better, to relax before I go to bed. So, and that has been a deep normal routine for me.
Do you have a particular book that you would highly recommend to our audience?
Yeah, and I'm big on cognitive diversity, and I'm big on your own biases as human beings. And we all build biases over time, and we don't even know. And we build habits which are good, and some of the habits are really bad. And they stop us or prevent us. There's a book called The Undoing Project. I don't know if you've heard of that. It's
I've just read it. Yeah, it's amazing.
Yeah, what do you think about it?
Well, I named the author earlier. I'm a big fan of the biographer, in essence.
Yeah.
Michael
Lewis.
Yeah. And this was a very strange. This was an atypical type of book for him. Anyway, nonetheless, I found it fascinating. My partner is a professor in university. I don't really personally know the world so much apart from through her, and so it was very interesting to get close to the passion of these two professors who are the main narrative in this book, and try to understand why that connection and gel between them was so interesting. And as you were saying there, you know, to try and read across different type of topics, I find really interesting, so that you're not just constantly going down into the same type of niche that you're reading. And so for me, that book was a different type of book for me. It was on point with what we're doing with the Mana Group, where a lot of our focus is to do with creativity and diversity and inclusion and these type of things. So I really enjoyed it. How about you? What was it that you took from it?
Yeah, and I think very similar stuff, right? Like just I think I hadn't read anything like that. It just opened my mind to thinking about things differently, like, you know, and being aware of what sometimes you're not aware of yourself. And sometimes, you know, I don't know, maybe this was not that deep, and I was like, hey, I need to question, you know, your own doing, and having self-reflection, right? I think self-reflection was like interesting takeaway for me.
When you're working with functions that are hiring people, as we do in our organization, and when you're doing that for your own team, what you this slightly light comment, but what I find is that 99% of people aren't aware that they could do any better, almost always on tasks. And so once you're aware of that, it's quite easy to understand that you're definitely probably not doing everything that you could. You're hopefully, if you're motivated, trying your best. But, you know, looking at it from a debate perspective and contrarian thoughts are where then sometimes you can test your own models. So, you know, Charlie Munger, Warren Buffett's partner, who just has a million brilliant snippets, you know, is very keen to say, you know, if I'm thinking the same thing that I thought 2 years ago, then something's going wrong. I always test my strong beliefs and I try to break those. Otherwise, I don't have an agile mindset. And so I took some of these type of things from it. We're supposed to be...
I'm a big believer of that.
Yeah, we're supposed to be like best in class at hiring brilliant cultures. And, you know, no one in the world is. It's so challenging. People are so complex, and bringing teams together is really hard. So, you know, if we ever get complacent in our team, then what I found that book very useful for, and I got a bunch of the team to read it, was look how many biases we already have in our process. Look how we're selecting who we suspect is going to be great. How can we challenge those? How can we use some of those military systems, you know, for the volume, for the selection, but how can we not lose some of the instinct that also might be useful at the right stage? And so I found that book very funny when he used various examples of how bad his bias was and everyone this was, and kind of like delivered into the team like, we've got all of these and we're terrible. You know, we need to up various practices that we use. But yeah, great shout out as a book. We'll put that in the show notes. Is there a particular quote or mantra that you have that you hold very dear and you come back to the whole time?
I think for business, specifically, and you would always, in the function I work, I always say is change is the only constant.
Nice.
And that's, and it's more than a mantra. It's more putting people at ease when they, you know, in terms of when people get, oh my goodness, I be changing, and sometimes we change often, and I tell them, if you don't change, you become dinosaurs. And change is not bad. Change is for good. Change for the sake of change, don't do it. That's terrible and disruptive. And but we are growing organisms, right? We are learning organisms, and if you're not changing based on our learning, then we're not growing, and we're not doing the best of our job. And so that's something. I think people get very uneasy with change, right? And especially engineers get attached to, oh my goodness, we you know. And so I'm like, I even like us sometimes, we going back to the undoing project, we get attached to our habits or the way we think, and we think that's the right way to do things. And undoing project is just an example of how you can challenge that, but there's so many ways, right? Like I tell team that every X period of time we need to be looking at our processes, right? What's working, what's not working. Let's just change it. Our org structure, let's just change it. Like continuously being okay with. And I think when you start building an organization which is a growing, living organism that changes, and our market, right? We live in Web3 blockchain market. It's changing as rapidly as we can think, and being able to pivot. I think those organizations do well as a function. So that's something I always tell my team, especially when they get really uneasy about. And again, I think this goes back to not changing the vision, not changing the outcome, because I think that we have chosen very thoughtfully. It's sometimes being more nimble and agile about changing the approach that helps us achieve it the fastest.
Yeah, I love it. There's a famous, in the UK anyway, explorer, Sir Fines, and he wrote some really great books. And there's this one thing that kind of stuck with me, which is very obvious when you think about it, but I use for that type of situation, which was, you know, he said, you know, when you're at the start of the rapids on an adventure, like you've got absolutely no way of understanding how you're going to navigate your way through those rapids. You just have to let go of the side and get going. And it sounds so obvious at guru level. There's obviously more to it, but it's also true. And I think particularly in the markets that we're in, you know, this type of like blitz scaling organization as well, you need to take it away from stress that, you know, the change hits you and you're stressed about it, to pressure that, you know, that will inevitably happen, and embrace it. So it's super powerful. The last question in the round is to find out what your mana is. So just to explain, the mana is your superpower, it's your magic. What would you say your mana is?
I don't like giving up. I am not afraid of failure. I know what I don't know. I know I don't know everything, and but I like to try and fail and, you know, get back up again. Is the song we sing internally. I have with my kids all the time. If you put that one from Trolls. So it's something, I think, going back to just like embracing change is embracing failure, is embracing grit, and I think I'm a very optimistic person at a very deep level, and so I'm like, the only way you can keep your optimism is having the grit, because you know you're going to try it and it's going to work the second time, the third time, the 10th time, the 20th time. Who knows? But I don't like giving up. I'm very competitive.
Fantastic. I love it. Well, Pratima, it's been an absolute pleasure. We've got to do a bunch of other shows. There's so many things further for us to discuss. But thank you so much for coming on the Searching for Mana show.
Oh, thank you for having me. Appreciate it, Lloyd.